Welcome back, everybody, to another deep dive. Today, we're taking a look at dividends,
Dividends.
which are those payouts that companies will make to their shareholders.
That's right.
And you want to know more about these?
Yes, I do.
Well, luckily, you've provided us with some excellent material today to jump into this.
Sounds good.
We have some excerpts that break down not only what a dividend is, but also the different types,
Uh-huh.
how dividends impact share prices,
Okay.
and even all the key dates involved in that whole dividend payout process.
Oh, fantastic.
So you want to understand how these companies are sharing their profits with investors.
I really do.
Well, let's dive in and see how these payouts actually work.
Great. Let's do it.
What is a dividend?
Okay, so let's imagine.
We love imagining things.
Me too. Let's imagine that you own a piece of a pie shop.
Pie.
Right. Who doesn't love pie?
Oh.
Now, as an owner of that pie shop,
Okay.
that makes you a shareholder.
Okay.
You're entitled to a slice of the profits,
Right.
and that's your dividend.
Like that analogy.
Yeah, well, a dividend really is just a reward for investing in a company.
Okay.
And it can take various forms.
Wait, so you're saying that dividends don't always have to be cash?
That is exactly what I'm saying.
This is exciting. What other forms can they take?
So there are three main types of dividends.
3. All right, lay it on me.
Okay, so the most common type is, of course, cash dividends.
All right. Makes sense.
So this is like getting a slice of that delicious pie, but in cash form.
Right, so that's cash.
Then we have stock dividends.
Stock dividends.
Instead of getting cash, you receive more ownership in the pie shop.
So more slices of the pie.
Exactly. You got it.
I'm following.
You get more pieces of the pie,
More pie.
and that increases your ownership in the company.
Okay.
And then last but not least, we have property dividends.
Property dividends. What is that?
So this one's a little less common,
Okay.
but imagine the pie shop decides to reward you with something other than cash or stock.
Like what?
Well, maybe they give you a pie oven. Right. Or some other asset related to the business.
That is interesting.
This is kind of like if a tech company were to give you shares in a spin-off company, or if a real estate company gave you a piece of land.
Oh, wow. So it can get pretty interesting.
It can.
Well, that's really cool.
Yeah.
So we've talked about the different types of dividends, but let's talk about how those impact share price. Because I have a feeling it doesn't just go straight up forever just because the company is paying a dividend.
Yeah, you're absolutely right. It's not a straight line up when it comes to dividends and share price.
Okay.
There is a little dance that happens.
Okay, tell me about this dance.
So typically, when a company announces a dividend, the stock price often goes up
Makes sense.
because investors are anticipating that payout. They want to get in on
You
that.
want a slice of that pie.
Exactly.
Okay.
But then we have this thing called the ex-dividend date.
Ex-dividend date. Okay.
And if you buy the stock after this date,
Yeah.
you actually miss out on that upcoming dividend. So it's really important.
I've been burned by that before, I think.
Yeah, and because that payout is no longer attached to the stock,
Right.
the price usually adjusts downward.
It's got to go down to reflect the fact that money's leaving the company.
That's right. It's reflecting the cash that's leaving the company.
Makes sense.
Yeah, so it's important to understand that
Yeah.
so that you don't buy a stock just before the ex-dividend date
Oh, man, that would be the worst.
and then experience this immediate drop.
Paper loss.
Yeah, it can feel bad.
Yeah, you're excited thinking you got in at a good price, and then boom, all of a sudden it drops down.
Right.
Well, that's interesting. So we've talked about the different types of dividends,
Uh-huh.
how they can impact share price.
Yep.
What are some other ways that understanding dividends can help somebody build a really strong portfolio?
Well, it really comes down to aligning your investment strategy with your goals.
Okay.
Like if you're someone who's looking for some regular income,
Yeah.
then building a portfolio of these reliable dividend pairs can create a steady stream of cash flow for you.
So you're getting paid just for holding the stock.
Yeah, you're getting paid to own a piece of that pie shop.
I like it. But there's got to be a catch.
There's always a catch, right?
Yeah.
It's important to remember that even companies with a really long history of paying dividends,
Uh-huh.
they can cut or suspend those dividends.
Oh, so it's not guaranteed.
Right. If their financial situation were to change,
Okay.
it can change.
That makes sense.
So you always want to make sure that you're researching a company,
Okay.
looking at their financial health,
Uh-huh.
and looking at the sustainability of their dividend program.
So it's not just about chasing that highest yield. It's about looking for companies that have a good track record and look like they're going to be able to continue paying those dividends.
You got it. That is exactly right.
Awesome. Well, I've learned a lot today about dividends.
Good. Me too.
And I think our listeners have as well.
I hope so.
We've learned that dividends are more than just these simple payouts. They're a really valuable tool to understanding a company's financial health,
Uh,
their growth strategy,
yeah,
and their commitment to their shareholders.
for sure.
We've learned about the different types of dividends
Yeah,
and that relationship between those payouts and the share price,
absolutely.
which will help you make more informed decisions as an investor.
That's what it's all about.
So now that you know all the key elements of dividends, what type of dividend-paying companies would you target to build your own portfolio? That's something to think about as you continue to learn more about the world of investing.
Absolutely.
Until next time, happy diving.
See ya, bye.
Bye.